President Muhammadu Buhari seeks House approval of Finance Bill 2021. Legislations aimed at stabilizing the nation's economy underway. Nigerian Communications Commission qualifies 3 bidders for 5G auction. Plus, oil prices rise as OPEC Plus poised to act if demand weakens. This is Business Express and we are reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Good to have you join us at a time such as this. I will start by telling you that President Muhammadu Buhari has transmitted to the House of Representatives the Finance Bill 2021 for consideration and passage. National Assembly correspondent Lami Ali reports that the bill contains provisions to support the implementation of the 2022 budget.
The President's communication was read by the Speaker Femi Gbajabiamila as the commencement of plenary. It contains highlights of the Finance Bill, in particular the coordination, administration and enforcement of tax reforms by the Federal Inland Revenue Service and other fiscal provisions.
I trust that the bill will be favorably considered by the National Assembly for passage into law so that it may provide fiscal support necessary for the implementation of the 2022 federal budget.
A bill to establish Material Standard Agency seeking to address building collapse passed second reading.
A matric course is the use of substandard materials.
This bill is fundamentally in conflict with the provisions of Standard Organization of Nigeria.
If the buildings of Nigerians are collapsing and killing people, they are not doing their job.
The problem of building collapse in Nigeria has become so endemic.
People are pointing fingers at the level of supervision.
And now legislations that will complement the federal government's drive to ensure the stability of the country's economy are underway by the Senate Committee on Banking, Insurance and Other Financial Institutions. The process has begun with a retreat to identify issues responsible for the country's economic crisis and high rate of unemployment. National Assembly correspondent Abdullahi Aminu reports.
It was a 2-day forum aimed at consolidating the efficiency of the country's asset recovery processes and promotion of an effective supervision framework in the Nigerian banking sector.
Because of those cases hanging in court, these assets depreciate and we are unable to realize them.
So many factors came up that affected the recovery effort, even the contribution effort.
What led to the creation of AMCON was largely the absence of good risk management practices within the banks.
The committee resolved to draw the attention of the Senate to the need to publish names of the individuals that are owing 51% of AMCON loan amounting to more than 4 trillion naira. It also resolved to push for legislative intervention for speedy dispensation of legal matters involving financial litigations.
Those people are highly placed Nigerians. They try to frustrate AMCON effort through judiciary, and that is what we're looking at.
There's a need to bring the judiciary to a better understanding of not just the mandate of AMCON, but the practice and procedure.
The committee chairman assured of the commitment to strengthen interagency collaboration with the financial regulatory bodies on exceptional financial situations.
Moodys Investor Service has changed the outlook on the government of Nigeria to stable from negative and affirm its long-term issuer and senior unsecured ratings at B2. Moodys also affirmed the government of Nigeria's B2 senior unsecured medium-term note program rating. The change of outlook to stable reflects Moodys' expectation that higher oil prices and some measures taken by the government will help stabilize the sovereign's credit matrix and support its external position. The ongoing improvements in the macroeconomy and external position are likely to continue in the next few years, supported by the oil price environment. Nigeria's new Petroleum Industry Act legislation and the opening of the Dangote refinery that will structurally reduce demand for US dollars. At the same time, Moodys expects Nigeria's fiscal deficit to narrow very slowly, with ongoing efforts to increase non-oil government revenue, although weak governance and institutional capacity are likely to hamper execution. General government debt, including central bank funding and promissory notes, is projected to rise gradually towards 35% of GDP by 2025. Now, the 2021 Africa Economic Conference is underway in Cape Verde, themed Financing Africa's Post-COVID-19 Development. There is no doubt that the whole world has been looking at a post-COVID economy, looking at the severe impact on economies. Well, what is Africa doing? How will the conversation drive the desired growth? Africa heads of state and government, along with senior policymakers, are already sharing ideas on how to reshape Africa's development financing models at the conference. I have joining me Professor Bartlomeo Ama. He is the Director of Microeconomics and Governance Division of the United Nations Economic Commission for Africa, UNECA. Professor, you are welcome to Business Express.
Thank you. Thank you. It's a pleasure.
Good. Perhaps we should start with the position of the ECA on this pandemic. What is the continent against in this recovery journey?
Well, the pandemic, as we all know, has had both on the health, but more importantly, an economic impact on the African countries. And the current policy of travel bans and restrictions on travel, I believe, are counterproductive and disruptive. And it's not clear whether they actually lead to a slowdown in the transmission, because we know that there are countries where the virus the new variant has been observed without any evidence of travel. So I think we need to work more closely and in a coordinated manner, focused largely on providing access to vaccines, particularly in Africa, where the vaccination rate is less than 5%. So I think that is the way to go, increase access to resources to facilitate the increased vaccination, and also encouraging local production of vaccines where necessary. But I think we as Africans also need to step up our efforts to do our own research and to even come up with our own vaccines as appropriate to really lessen dependence on external sources of vaccination and medicine, so to speak.
Well, Prof, there has been talks about having our own solution to this pandemic, talking about the vaccines. Now that we have less than 5% for the whole continent, any position yet on the Omicron variant, the variant yet?
Well, I mean, on the medical position, we are not the medical experts, so we can only depend on what the medical experts say.
Yeah, I was talking about the economic angle to it.
The economic impact. Well, I don't think the Omicron variant is going to have any different of an impact than the Delta variant. It's just probably going to prolong the recovery if the transmission is more likely with this Omicron. Then again, it means that the recovery could be delayed. But the solution is really to improve access to vaccines, because the current evidence suggests that the vaccines are still effective against this variant. So the way forward is to increase access to liquidity, for first and foremost improving access to vaccines, and then secondly, really ensuring that businesses, particularly the small-scale businesses, do not continue to suffer from the disruptions that have been caused by the pandemic. First and foremost is really access to social protection, because Africa, social protection is the coverage is very, very low. It's less than 20%. And so we need to formalize these social protection mechanisms. Currently, people depend on family members for support. The actual social protection, formal social protection mechanisms need to be improved. But then again, we also need to continue to leverage efforts to diversify our economies, to minimize shocks. We know that even the so-called middle-income countries in Africa, largely even the small island developing states like Cote d'Ivoire, Cabo Verde, Mauritius, Seychelles. These are middle-income and high middle-income countries that have been impacted by the pandemic because the sources of income are largely in the area of tourism, so they are more vulnerable to these shocks. So economic diversification should be something we should continue to promote, and leveraging on the African Free Trade Agreement, which then provides us an opportunity to expand our domestic markets, regional markets, and also expand our production sources so that we're not very dependent on just one sector. So economic diversification, social protection, and then increased access to vaccines, because the first access to vaccines is the first line of defense. The more we have the infections, the less likely we can recover. So I think those are important elements that need to be taken into account in the recovery.
Okay, Prof, with these very important steps you've suggested as a journey to recovery, how are member states keen into this initiative, talking about increasing the liquidity, the social investments, the diversification of the economy? Are we doing well to meet up the level at which we are with the threat of the variants coming, the Delta, the Omicron, and we don't know what else will come after this?
Well, one of the things we've seen with the onset of the vaccines is that, countries became a little bit more innovative. We saw local production of masks and these all the related elements to prevent the spread. We saw some nascent internal production of some of these medical supplies. This has to be leveraged. As to whether we are there yet, the answer is no. Different countries are at different stages, but we hope that this will be a wake-up call for countries to actually begin the process of taking seriously the efforts of diversification, because without that, we cannot move forward. And so we are obviously have been impacted economically because we didn't do what we needed to do on a sufficient scale to mitigate or to minimize the impact of these shocks. Our debt levels have increased. Although we have contracted a lot of debt, one has to ask the question, to what extent did that increase our GDP so that we don't get into debt vulnerabilities? So the use of debt is something that we really need to question. What is the value for money in terms of, for every dollar we actually incur in debt, what are the impacts on the economy?
How are we utilizing such income?
Pardon?
How are we utilizing such resources is the question you're asking.
Yes, we are spending quite a bit on infrastructure, but then what is the cost of that infrastructure? Is it really at competitive rates, or are we over-invoicing our infrastructure expenditures? I think these are questions that we need to ask because it's not, incurring debt is not a bad thing. It is what you do with the debt that really matters.
Well, are we asking such questions at the conference?
Yes, we are. We are interrogating the policymakers We are, what is interesting is that when you talk to policymakers, they say all the right things about the need for African solutions to African problems, the need to improve governance. They're admitting that there are governance challenges. The question then is, what is the incentive? What are the kind of pressures that civil society and society in general, what kind of pressures are they putting on governments to do the right thing? What kind of institutions do we have to act as checks on poor governance? I think really Africa's challenge is not knowing what to do, but really implementation, trying to get policymakers to do the right thing and having a credible threat on governments that do not do the right thing. And credible threat meaning, using the ballot box, but that comes every 4 or 5 years. So we have Auditor General's reports that tell us what's going on in a country. But how do these then translate into policy changes? There's a disconnect between what we know about what is happening and how to get governments to actually change their behavior.
Let's get to see the action and play out. Well, aside that, what is your take on the travel ban on some African countries by some other countries?
Well, as I indicated, I mean, the travel ban is informed by the hypothesis that this new variant came from certain countries, and that has actually been shown to be questionable because we've seen the variant emerging in individuals with no travel history. And the question is, it has not even been effective because the variant is actually being found in a lot of different countries. So it only creates panic. And what we really need to do is to have these measures, which is access to vaccines, because this is not the first variant. It will not be it's just not the last variant that will emerge. And so you cannot even predict. It's even difficult to know when these variants emerge. I mean, South Africa was competent enough to figure it out, but they may have even figured it out before it was identified in other countries. So for me, the big question is, what is the line of defense? Not so much about trying to restrict people's movements, but really how do we make societies more resilient to these new variants? And the only tried and tested measure we have is the access to vaccines. And vaccine hesitancy is a challenge we need to address. But I think vaccine access is also a much bigger challenge, particularly in countries in the Africa region that where the vaccine access is pretty limited.
Thank you so very much, Professor Bartlomeo Ama, Director of Microeconomics and Governance Division of UNECA, for sharing your thoughts with us at this particular point in time. We hope that the outcome of your meetings will be so fruitful that Africa will get to go beyond 5% of vaccination and the economies get to recover and recover so fast.
My pleasure. Thank you very much.
Thank you. Moving on, starting December 5th, Emirates is expected to resume daily flight services to and from Nigeria. This is coming after months of speculations that flight ban would be removed. The resumption offers more connectivity options to and through Dubai. Dubai authorities say travelers coming from Nigeria must hold a negative COVID-19 PCR test certificate for a test taken no more than 72 hours before departure. And the Nigerian Communications Commission qualifies MTN Nigeria PLC, Airtel Networks Limited, and one new player for its 5G auction. The NCC announced on Thursday only 3 qualified bidders met its criteria for the licensing process for the 3.5 gigahertz spectrum, which is required for 5G deployment, and these 3 companies paid at least $19.74 million in order to qualify. The Nigerian Midstream and Downstream Petroleum Regulatory Authority said it will continue to honor and process claims for bridging of petroleum, that's the PMS, to ensure product availability nationwide. Chief Executive Farouk Ahmed said This while interfacing with delegates from the National Association of Road Transport Owners, NATO. A statement by Farouk Ahmed said the authority is aware of the fact that the signing of Petroleum Industry Act, the PIA 2021, leading to the creation of the NMDPRA, may have raised some uncertainty on the continuation of the bridging scheme, particularly on whether or not bridging funds will continue to be paid to beneficiaries. He urged NATO and other stakeholders not to panic because all verified bridging obligations will be honored and paid by the authority. He urged NATO to ensure that it plays its part in ensuring petroleum availability throughout the Yuletide period and beyond. National President NATO Yusuf Lawal Othman had informed the Nigerian midstream and downstream petroleum regulatory authority of outstanding payments owed its members by the federal government. The 23rd OPEC and non-OPEC ministerial meeting held via video conference. It has reaffirmed the continued commitment of participating countries in the declaration of cooperation to ensure a stable and balanced oil market. In a view of current oil market fundamentals, the meeting resolved to reaffirm the decision of the 10th non-OPEC ministerial meeting and reconfirm the production adjustment plan and monthly production adjustment mechanism approved and decision to adjust upward the monthly overall production by 0.4 million barrels per day for the month of January 2022. The meeting agreed to continue to monitor the market closely and make immediate adjustments if required. Oil prices climbed on Friday after the producer group OPEC Plus said it could review its production hike policy at short notice if oil demand collapsed due to a rising number of lockdowns. While Brent was on course for a sixth week of declines, Brent crude futures rose $1.90 to $71.57 a barrel. U.S. West Texas Intermediate as WTI crude futures rose $1.78 to $68.31 a barrel. Let's take a trip to the commodities market now. Well, in the capital market, profit-taking has continued to drag down stocks at the Nigerian capital market with another day of decline as the market dipped 0.19% to end the all-share index at 42,167.91 basis points. We had a volume of shares at 180 million, valued at 2.425 billion naira in 4,019 deals. Market capitalization is 22.03 trillion naira. That wraps this edition of Business Express and of course the last for the week. Remember to keep safe. See you next week.